Our stories begin right here, and we never write them alone. Sometimes we write them with someone who puts our story first. Other times with someone who puts their own story first. There'll be pages we love to read again and again, and some we'll barely remember. Sometimes we feel like the hero of our story, and other times, not. There are stories of dreamers, stories of creators, stories of strivers, stories of believers, and we're inspired by them all. That's why we invite you to write your story with us. Your story matters.
An excellent cup of tea often inspires a great story. This is a story of Global Tea and Commodities Limited. My name is Lalindra De Silva. I am the Financial Controller of Global Tea and Commodities Kenya Limited. We are by far the largest tea exporter in Kenya and probably in East Africa as well. Plus, we export tea to various countries such as the UK, the Middle East, West Africa, South America. Literally, you could find our tea all around the world. We have a wide range of teas, and by far we are the market leaders in the premium segment. Kenya has been one of the largest tea producing countries in the world. So us as Global Tea, we have strategically placed ourselves to ensure that the Kenyan tea reach to its proper destined customers, especially in the European markets, in the UK, where the Kenyan tea is found in almost all supermarket shelves. Our group as a whole has employed close to 1,000 employees and bettering the livelihoods of our fellow Kenyans. Out of that, 60% are ladies. That creates a ripple effect on their families. What about the youth? You have so much of people working in the port. We need drivers, we need turnboys. So all these employment opportunities come up, and also when you're loading the teas, the tea industry, also Global Tea, with the amount of volumes we generate, has had a positive impact to Mombasa. We've been with Absa for quite some time. Our relationship really took off last year, where we got into working capital funding with Absa. The facilities which we enjoy from Absa has helped us grow our business in the last year tremendously. Today, the current trade environment in the world is ever-changing. We face so much of challenges, from delays in shipping lines, to getting the teas out, to foreign currency problems. One of the rainbows in the storm has been Absa's TMO system, where now we don't need to send physical documents to the bank anymore. We just need to upload the documents on the Absa system, and our job gets done. Our invoices get discounted within the same day the payments come through. It's a system which have clearly understood a need in the market and has been a game changer. Absa is a bank which understands the client's needs. They understood what Global Tea required. When you start growing, you need a bank which can fund that growth as well. Absa was the first bank to put their hands up and say, we would like to partner with you. Looking back 30 years ago, from starting from one warehouse to setting up the largest tea processing plant in East Africa, we have come a long way. That has been our story. There are so many pages more which needs to be written, and I am extremely happy that Absa has partnered with us. Together, we can write the next chapter of our story. A story which involves growth, employment opportunities, more funding coming into the country, and taking Kenyan tea to the next level.
Sian Flowers was established in 1993. The inspiration for the founders was climate was ideal, the workforce was ideal, and also our access to the European markets was there where most flowers were being sold to. My name is Peter Chesrem. I'm a director with the Sian Flowers Group. We are at Equator Flowers in Eldoret, and this is one of our 4 farms. Sian Flowers is one of the largest producers of cut roses in the world. particularly spray roses. We have got 4 farms across Kenya. We started off with Agriflora in 1995, and then we moved on to Equator in 1997, Masai Flowers in 2008, and in 2019 we had our latest venture, Sololo Agriculture, where we grow mainly summer flowers. Sea and Roses actually serves mainly the European markets. About 60% of our flowers go to Europe, both to the auction and also to direct customers who are selling in supermarkets and wholesalers. We grow not just roses, but we also grow summer flowers as well. It's been a steady growth since we began. We used to grow single-headed roses. We've moved on to spray roses, and now we've also added summer roses onto our portfolio of products. And we're also now moving into packed at source bouquets. Our partnership with Absa has evolved over time because initially when we started off in the early 90s, they assisted us to set up the different initial farms, and they've continued to help us to expand to the new farms as well. For business like Sea and Flowers, with our wide supply across the world, it's important to have a banking partner like Absa because of their financial muscle. We're able to have that support as we grow. Absa has provided us with loan facilities, especially when we're setting up our new products, when we're expanding the farms, when we're establishing our irrigation systems. Sustainability is important for us because as we've seen over the years, both our customers are demanding it, but also our local communities are demanding for us to be more sustainable. Absa has assisted us to engage in projects such as setting up our solar plants across the 4 farms. We've been able to cut 40% renewable energy across our farms, which not only reduces our costs, but also reduces our carbon footprint. It's important for our customers to know that we are finding the most sustainable ways to produce these roses, which will go a long way towards ensuring that in the future that our environment is actually kept clean and good. We employ over 2,500 employees across our 4 farms. So the biggest impact that Absa has had on our business was actually during the COVID-19 pandemic. With Absa's support, we're able to work out how we can continue with this project, because during that period, a lot of organizations were scaling down their operations, whereas we were actually starting off a whole new farm and creating a whole new strategy for the Sea and Flowers group. Absa's support was really significant during that period because we actually laid off 0 staff, and even for our customers, they knew that if we could get through that period unscathed, there was actually a lot of room for growth and they could rely on us. So the future plans of Sea and Flowers is we want to actually move towards bouquet making. Currently, we send our flowers as mono bunches. We're seeing a steady progression of more of that value addition being moved to Kenya. So as Sea and Flowers, we want to actually make 90% of our exports to be bouquets. That'll actually create more employment. It will increase our revenues of the company. As we move into value addition, it's going to be quite a massive project. But we know that with Absa, as we've been through the last 25 years, we'll be able to achieve our goals and ensure that for the coming decades, we'll actually be able to meet our market needs. Absa has taken the time to understand our story. They've been with us from the beginning when we started off on 20 hectares, and now we're over 200 hectares. Over that period, Absa has got to know our story and where we're going to. Because of that, we are confident that
What happens when you place Africa's story at the heart of everything you do? Seeing opportunities in every individual's or business's story and building the partnerships that unlock them. Partnerships that drive innovation and progress, that open doors and bring continents together. Inspired by our purpose, empowering Africa's tomorrow together, one story at a time. 2024 has seen us celebrate a continent's worth of stories, including our own. We began the year with a new brand promise, inviting over 37,000 colleagues to write our new story with us as we revealed our new payoff line, Your Story Matters, and using innovation and art to highlight the collective power of our stories. We formed partnerships that put our customers' needs at the center of everything we do. Strategic alliances with Renault and Amoda and JCU offer customers seamless vehicle finance solutions while building an ecosystem that supports the automotive industry's growth. Our partnership with Cars.co.za supports customers while bridging the gap between consumers, dealers, and manufacturers. Our free accidental death cover through a cashless payment system allows taxi drivers We used our sponsorship of the Premier League to reward loyal customers for tapping their Absa debit or credit card. And we're empowering the agribusiness value chain by providing insights that foster sustainable growth. With the acquisition of HSBC Mauritius's domestic wealth, personal and business banking businesses, and the opening of our office in China was a significant milestone for our group, aligning with our strategy of building key global corridors to better connect trade, investment flows, and clients in Africa. Your story is our story, and we continue to invest in initiatives that create a better, more equitable tomorrow. Initiatives that uplift women, such as the Women's Month celebration in Zambia, that spearhead thought leadership and empower women-led businesses in Kenya and beyond, that drive Africa's growth and development by empowering youth-led and women-led SMEs, such as the Absa Young Africa Works initiative, and that promote access to education, allowing Legacy Girls College to expand its operations. Initiatives that nurture, grow, and unlock opportunities for SMMEs and local business, the engines that will drive African economies. And we continue to invest in the wellness of our continent's youth, creating opportunities and preparing them for an exciting future. As a digitally powered business, we explored and honored trends and innovations in commercial banking and payments. We enabled customers in Kenya and Mauritius to pay by simply tapping their phones. Ultimate Banking was launched in South Africa, offering customers the best integrated banking solution at the lowest cost in its category. And we created a seamless experience that now allows customers to replace their cards at selected Absa ATMs in less than 2 minutes. Through the Absa banking app, Ugandans can now transfer funds locally and globally with ease. We continue to promote financial inclusion by giving South Africans from all walks of life access to basic banking services via WhatsApp. And we found innovative ways to educate our customers about cybersecurity. We are passionate about the stories that make a positive impact across our continent, about empowering businesses to provide communities with access to healthcare, and as Africa's largest renewable energy finance provider, about structuring financing options for businesses that drive the energy transition. We teamed up with the International Finance Corporation to promote sustainable green living. We are partnering with governments to protect terrestrial and ocean ecosystems. And we reported back to society and to our stakeholders on our efforts across the continent to contribute to a just, inclusive, and sustainable future for all. Seizing every opportunity to drive primacy, be an active force for good, and connect with our customers and communities over things that matter to them. We used our sponsorships to level playing fields, open doors, inspire and elevate African stories through our support of art, culture, and sport, including leveraging our sponsorship of the Sunshine Ladies Tour to promote women in golf, and of the Absa Cape Epic to inspire women cyclists and empower the local economy. We honored colleagues across our Arrow markets for their unwavering pursuit of excellence and for being a force for good in society. Our digital innovations were recognized at the Digital Banker Customer Experience Awards. We won Best Islamic Banking Window South Africa and Best SME Bank South Africa. Absa Insurance won 3 Sambra Awards in top categories. Our Arrow colleagues received 42 awards that celebrate excellence across categories. And our focus on building a winning, talented and diverse team was rewarded as we retained our Top Employer Africa status for the 3rd consecutive year. These are some of the stories that have defined the first half of 2024. Stories that drive change. Stories that change lives. Stories that build a better tomorrow. We are proud of the role we've played in every single one. These are our stories. Your story. Because your story matters.
Good morning, Peter.
We believe in ideas that can change the world.
driver, and believer. At Absa Corporate and Investment Banking, we are invested in your story, and we invite you to write it with us, because your story matters. Absa.
Good morning, ladies and gentlemen. I'm hoping that you're all having a great morning today. You have enjoyed your breakfast, and those who are still having their breakfast, please continue. We'll kick off with the formal program. You know, I'm reminded that we are very close to the Arboretum, so we must take the opportunity to soak into some fresh air. You know, those of us who don't live very close to the, to the woods, we got our Arboretum here, so this is a fantastic place to be on a Monday morning and to kick off the week. So, ladies and gentlemen, welcome to our half one financial results announcement. I would like to welcome the audience that is following us online. We've got audience that is on LinkedIn, audience that is on YouTube. Karibuni sana. So before we get started, I would like to recognize the presence of leadership from Absa Kenya PLC, led by our MD, Mr. Abdi Mohammed. I'll quickly just introduce those who are in the room, and then we'll continue with the program. I think I'll do it table by table because I see that we are actually seated on the same tables. I'll start off with our Chief People Officer, Mumbi Kahindo. Thank you. Then I'll introduce our Global Markets Director. I didn't forget the name. It's Stella Mambo. And then Sharon Ingari, our Internal Auditor. Ken Kanyarati, our Legal and Compliance Director. Julius Kamau, our Chief Operating and Digital Officer. Then I'll move on to the next table. I'll start off with James again, Managing Principal, CIB, Corporate and Investment Banking. Elizabeth Wasuna, our Business Banking Director. And then we've got Shera Waidaka, our Chief Risk Officer. Moses Mudui, our Consumer Director. Then we've got our CFO. You all know Mr. Yusuf Omari. And then, of course, our MD, who you're going to interact with today. So, ladies and gentlemen, at Absa, we are big on stories. And it's because we recognize that there's an opportunity in each and every individual story. That's why we say every story matters. So I want to turn your attention to the screens. We've got two screens, one at the back and one in front here. And let's hear some stories from our customers on how we continue to write their individual stories together. Welcome.
I'm Damaris Debets, the founder of Athari Betrebets. I started it back in 2022 while I was still in campus. And since then, it has grown really immensely. First of all, I'm a Shista. I graduated this year, May. The program really helped me with skills. And also, Absa has helped me with finances, since SMEs and finances is really tough. but they have helped me finance my business and it has grown really virtual. I like Absa because they walk with you through the journey. No matter how small, for us, the youth entrepreneurs, we always fear banks because we don't know anything about it. But for Absa, they partner with you, they work with you throughout your business.
My name is Wambui Mugonjogu, one of the director at Waterline Hardware and Tools. In the location Kitengela, because it's a fast growing town. Tunataka ukiingia uone aya wako na kila kitu. Hiyo kuget kila kitu, kuna point ilifika tukaona we need finances kustock hiyo duka. Na that's when a friend akatuambia, by the way, Absa hupatiana secured loan. Hapo ndipo tukaenda Absa. We told them the plan we had for our business, na kitu ya kwanza wakatupatia overdraft. To be able to expand the shop. Getting a bank that will believe in you, will believe in your dreams, that was a dream come true.
An excellent cup of tea often inspires a great story. This is a story of Global Tea and Commodities Limited. We are by far the largest tea exporter in Kenya and probably in East Africa as well. And by far we are the market leaders in the premium segment. Our group has employed close to 1,000 employees. Out of that, 60% are ladies. What about the youth? You have so much of people working in the port. So all these employment opportunities has had a positive impact on Mombasa. We've been with Absa for quite some time. The facilities which we enjoy has helped us grow our business in the last year tremendously. We face so much of challenges. One of the rainbows in the storm has been Absa's TMO system. We just need to upload the documents on the Absa system and our job gets done. They understood what Global Tea required. And together we can write the next chapter of our story.
Together, we can write the next chapter of your story. So, ladies and gentlemen, our program this morning is quite brief. We're going to be here for about an hour. And we're going to hear about Absa Bank Kenya PLC performance in the first half of 2024. We'll start off by having presentations from our MD, Mr. Abdi Mohammed, and our Chief Finance Officer, Mr. Yusuf Omari. And at this juncture, ladies and gentlemen, I would like you to join me in welcoming on stage our MD, Mr. Abdi Mohammed.
Thank you very much. Good morning, everybody. Our customers, our shareholders, analysts, members of the media. I see quite a number of familiar faces in the room. Good morning. Hamjambo. I also recognize those on the online streaming, and I believe potentially includes some of our board members as well. I recognize their presence this morning. First of all, thank you so much for making time in this morning, which is not quite a warm morning, for being here with us very early in the morning as we share our report for the first half of the year 2024. As always, we'll do it in about 2 or 3 sections. I'll cover the overview, which I will do just now, and look at the overall macroeconomic environment in which we are doing business, provide an update on our strategic execution and where we are in terms of that. And then I'll invite our Finance Director, Yusuf, to come up and share the actual numbers. I am seeing today he's wearing a dark, not a very dark suit. So we'll see what is in the briefcase when he comes up later on. But I think if I can just dive into the overall macroeconomic environment, as it has been over the last few years, it continues to be a mixed picture, quite a number of positives in that environment, and also some challenges and headwinds that our business is dealing with. On the positive side, the growth in the GDP continues to be resilient, continues to be above the global average, above the Africa average, and above the average for emerging markets, which is about 4.4. Kenya has grown north of 5% for the last couple of years, and the outlook for the period 2024 to 2026 still shows an outlook of about 5.2% on average. And this is a consensus outlook by the Central Bank Monetary Policy Committee, the IMF, and other independent players. So it's quite a positive, and it's driven by a number of key sectors. Agriculture has had 2 good years. The outlook for agriculture remains positive. Tourism has also had a good couple of years, and again the bookings and the forward-looking picture looks quite positive there as well. And within there, of course, there are sectors such as manufacturing and other areas where there have been challenges. Inflation at 4.3 is also well within the target range of the MPC. And you will remember this came down from about 9% just 1 year ago. And it's really the result of a lot of proactive work that has been done by the MPC, including some of the rates actions, the implementation of the corridor framework last year, which has really improved the way monetary policy actions are transmitted into the economy. And really, as an industry, we are very pleased about that, and this is something we have given feedback, positive feedback, to the central bank and to the governor. When you look at the CBR rate, in the last MPC meeting, there was a small reduction of about 25 basis points. It's an indication, it's a big signaling of the direction of travel for the rates as we look forward. And this is good news for customers of our industry. It is also good news for the industry itself, because we'll be able to lend more, we'll see improvements in impairment, and it has a lot of positive indication going forward. On the other side of the equation, we've seen increasing geopolitical challenges in the world, impacting, supply chains, shipping routes having to change, increasing the cost of goods. We've seen sticky inflation in the US, in the EU zone, that has led to delayed action in terms of possible rate reductions by the Fed and other central bank authorities out there. We've also seen depressed consumer spending as a result of some of the economic challenges that are in play. We've seen some of the actions ongoing to address the fiscal challenges that we see in the economy. So overall, mixed picture, a lot of good going on, a lot of positive indicators for the economy, and some challenges within which we have operated as a bank. Now, within this environment, we continue to execute our strategy. It's dynamic. We have the strategic flexibility, strategic capability within the organization to continue delivering on the strategic plan that we have agreed with our board and with the group. We are in the second year of our 5-year strategic cycle, and we're just coming to the end of that second year. And really what we have up here is just a few points that we have lifted from a very detailed scorecard on which we measure ourselves. And the summary of this is to say we are on course with our plan. We are on track to deliver the strategic agenda that we have committed to. I won't cover each of the points there, but really pick a few of the most critical ones. We see customer numbers continue to grow. This is a lead indicator for sustainable growth in our revenue and in our balance sheet going forward. 33% growth in new to bank customers, whether they are coming through our existing channels, branches and the legacy channels, or new digital customers that are coming in through those channels. You would have seen we've announced a significant scale up on our agency banking, and I'll talk about that later. And we see continuous growth in the digital lending space. In business banking, double-digit growth in Lariba, which is the Islamic banking proposition. A lot of work done in the women in business proposition as well, and significant investment in digitizing the business banking sector. And in corporate, we continue to become the primary bank for more customers every year. 29% increase in what we call primacy, which is we measure how many of our corporate customers primarily bank with Absa only as their primary bank. And that's something that we are very, very proud of. There is also increasing digitization in the corporate bank, and we see 84% of our CIB clients digitally active. Now, later on, when Yusuf presents the numbers, you will see that our cost-income ratio is still best in class, is one of the best in the market, and that gives us the opportunity to invest in technology and to improve our overall technology estate. And this year, we're investing 3 billion shillings into that space. We've done a lot of work on our brand and brand-related activities, and we continue to see improvements in our brand scores in terms of awareness, as well as in terms of the connectivity and brand relevance in the market. And lastly, on the colleague side, in terms of how we manage our people, we continue to track very well on diversity, whether you're talking about gender diversity and other elements of our diversity agenda. And we have been certified top employer for 3 years in a row. So these are just examples of some of the areas that we continue to focus on. Now, I'll go into a couple of these in a little bit more detail before I call up Yusuf. The first one is on customers. You know, at the end of the day, we can come here every half year to talk about numbers, to talk about balance sheet, revenues, etc. But underpinning all of this is the stories such as the ones we just saw on the video, which is customer stories and how we continue to engage with our customers. And we've picked a few numbers here. 64 billion in terms of gross lending in the first half of the year. And this stretches right from Timiza, the micro lending proposition, through SME, through mortgages, large corporates. It's across the board. And this is us playing our role in ensuring that the Kenyan economy continues to grow and continues to perform. We also have, in addition to providing financial support, a lot of non-financial activity, empowerment through knowledge, training, and just as an example, one of the big events we did earlier this year is a training event in which SMEs from 12 African countries attended. A lot of them women-led businesses. I think on site we had about 1,000 attendees, and from the online platforms we had over 10,000 attendees during that period. And these are some of the things that we do for our customers to ensure that we are providing support beyond financial. Of course, as I said earlier, there are sectors that go through challenges depending on the cycle. And one of the things we do working with our clients is to ensure that we help them restructure, we help them go through the difficulties. And this year, we have helped restructure facilities to the tune of 1.3 billion Kenya shillings to help Kenyan businesses work through the challenges that they experience. On the right-hand side of that slide, you see some of the key partnerships that we have. I won't go through all of them. I'll mention two. The first one, the partnership that we have with World Remit, which is a new partnership, allows us to participate in the inward remittances market, which is a big part, as you know, of Kenya's dollar inflows. And it's been a successful partnership, as a result of which we are now in advanced talks with 2 or 3 other partners who are participating in the inward remittances space. The next one I'll mention is really eCitizen, where we are one of the banks in Kenya that is fully integrated into eCitizen and allows our customers, corporate, SME, retail, to make payments through the eCitizen platform across different channels, branch, digital, internet, app, and provides that convenience to our customers. The next quick point I would like to make is on the distribution side and the footprint and the network that we have in the country. On the Kenya side, if I look at the local distribution that we have the branch network, 85 strong and growing. Even this year we've opened a few new outlets. We have the ATM network, we have the point of sale network, we have the agency network, which, as I was saying earlier, we increased significantly in the recent past, and we have the depositor machines that are in strategic locations. And it's fair to say that when you look at Absa's presence in Kenya today, that we are present in more locations than we have ever been in our history, and it's growing. And the philosophy there is to say to our customers, we want to be where you are. We don't want our customers to look for us, we want to look for our customers. And in fact, the tagline for our agency banking proposition in Swahili is Tupo Ulipo. That's the tagline that we use. In the diaspora, we have put in place capability for customers to digitally engage with us and to be able to open accounts with Absa. And what we have shown there is some of the traffic that we see from different parts of the world as Kenyans engage with us. We've listed a few of the products there. A key one there is the DAO CSD, which is a central bank-led initiative that allows Kenyans here in Kenya and everywhere in the world to invest in government securities directly. It's a partnership we are very proud of, and we are seeing a lot of interest from Kenyans in that. Now, on the Absa wider footprint in the continent, we are present in quite a number of countries, as you can see, but importantly, we now have offices in the US, in the UK, and most recently, we've opened our office in Beijing, and there are 1 or 2 other important international offices that are about to open as well. So this provides our customers access to Absa and access to our products and capabilities across those trading corridors in China, in Europe, in the US, and other parts of the world. So this is something we're very proud of. I'll very quickly go through the next 2 or 3 slides. Brand, we've talked about the positioning. We've talked about some of the key brand properties that we've been working on. Sport is a big part of it. We did Kenya Open earlier, Magical Kenya Open earlier on this year. It continues to grow bigger. It continues to attract international as well as regional attention. And we've partnered very closely with the Ministry of Sports in doing that. We've also done a lot of work on athletics, and we're very proud to be one of the lead partners of Athletics Kenya, because athletics is such a key part of Kenya's brand as a country. And as a Kenyan company, we are very proud to be associated with athletics, and we'll continue to do work in that space. And because of what we have done there, brand connectivity continues to improve. Our brand continues to be an asset for the organization, and we've shared there some of the awards that have come our way. Number one, most reputable brand by GlobeScan, most trusted financial brand by GlobeScan. And trust is a big deal in this industry. It's something we are very, very proud of, and a number of other awards that have come through as well. On the colleague side, as we look at our employees and the teams that work to deliver the results, a lot of good initiatives led by Mumbi here, some good work on gender diversity, gender balance, 50-50 roughly in our total employee base, and from a leadership perspective, in terms of management levels, 53% male, 47% female. We do a lot of internal training and internal promotions. So in addition to sourcing for talent from the market, we also ensure that people working internally in Absa get the opportunity, and we've shared there some of the numbers in terms of promotions, and 130 million of spend on training and skill development for our teams. And lastly, we have the sustainability agenda, something that we track very, very closely, and some of the numbers you see there indicative of the work that we've done around sustainability. 18 billion sustainable finance, including climate financing. So out of the 64 that I spoke about earlier, a significant chunk is in the sustainable space. 12 billion to startups and new entrepreneurs, and you saw some of them speaking earlier, and quite a significant chunk in SMEs and women-led businesses as well. We continue to do the Ready to Work initiative, which helps young people prepare for the workplace, and we've trained 5,000 year to date this year, which brings our total to about 250,000 since we started. So in summary, I think the point to be made as I wind up this section is that we've made significant progress against the strategic agenda that we committed to stakeholders. We have recorded growth in a dynamic environment, and we continue to invest in our technology, we continue to invest in our brand, and we continue to invest in our people through training and other initiatives, so that the performance that we show here is sustainable into the future. So, ladies and gentlemen, let me stop there, and let me request our Finance Director, Yusuf, to come up and share the numbers. Karibu sana, Yusuf. Thank you very much, ladies and gentlemen.
Good morning, everyone. I will ride on what the salutations that my boss has made, and also to acknowledge that I'm not wearing a dark suit, so it has nothing to do with the results. Quite interesting. I'm actually coming back from leave today. I was away for 2 weeks, somewhere where I took a flight for 14 hours. So bear with me. I woke up today at 3 in the morning. So having said that, let me dive straight to the numbers. And I'll start with the balance sheet, where we're basically looking at customer loans and deposits. Starting with customer loans, and we are showing this quarter on quarter so that you can be able to appreciate what is happening under each quarter. If you look at year on year, 318 billion back in June 2023, you see that number coming down slightly to 316 billion. I think what is important at this stage is we know very well it's a high interest rate environment in the country, and more so with also what has happened if you look at especially the consumer, the retail business, with the high cost of living picking up, especially when we look at the finance bill. We know some taxes that were increased, including the housing levy. And as a result of that, and looking at what the Monetary Policy Committee have been doing, raising interest rates, for the first time we saw CBR coming down in quite, if you are to look at it historically, that number has consistently been going up. This is the first time it's come down. So with that, we've seen a preference from customers, especially wholesale, and this is basically, we are talking about traders, to go for facilities that are short-term in nature. So in here, trade has picked up significantly. Things to do with overdraft to support on the side of, businesses. And we've seen customers shying away on long-term borrowing, term loans. Those ones have come down. And so the numbers you're seeing here, slight drop, but as our MD is saying, gross lending within this period is 68 billion shillings. So while it shows a small drop compared to the previous year, the churn there is quite high. And it's simply because of what I mentioned, preference for short-term lending at this point in time. Tied to that, of course, we've also seen our mortgage as a product. That number has picked up as well. And then we've also seen secured lending also picking up during this period. I think it will be important also to mention that these numbers, you can see all of it is in local currency, but about 30% of this book is in foreign currency facilities. And so it follows, you'll recall there's a time, the shilling to the dollar was trading at around 160. This has come down, and effectively, then it means also the numbers get impacted, not because of the gross lending, but simply because of strengthening of the Kenya shillings, which then implies that the drop will be also higher just because of strengthening of the Kenya shillings. If I look on the side of deposits, you see deposits picking up 6% up year on year. Again, with the high interest rate environment, we've seen pressure on our cost of funding. We are disclosing there, on average 1 year ago, it was about 3% cost of funds. You can see in this period, that number has basically picked up to the number that you're seeing there at 5%. In terms of also just looking at the impact of, the foreign currency, for the deposits, 25% of these numbers is actually foreign currency deposits. Again, it will follow the strengthening of the shilling will also have an impact on the numbers that you have there. Was it constant currency? If we had prepared these financials in constant currency, then the delta, the increase, will be much, much higher than what you're seeing there. If we then move to revenue, you see revenue in this period, 16% growth in revenue. That moves from 27.3 billion same time last year to 31.88 billion. If you could just move to the next slide, 31.8 billion. That's a 16% increment in loans and in revenue, which the component that is funded which will be the loans and advances and deposits, you can see an uptick, the net interest income picking up 20% from 19.2 to 23 billion shillings. In here, of course, the impact I mentioned on cost of funds will come under the line of interest expense, but then we've been able to make up for that. And more so when it's funded, don't forget that these are short-term facilities that have actually led to that impressive growth of 20% on net interest income. If you look at the non-funded income, that is a growth you see of 8%. All our subsidiaries making significant strides. So if you look at our securities business, if you look at our asset management business, and finally bancassurance, those are the three subsidiaries, all of them recording significant growth, which has an impact on that 8%. The risk fees, especially because of trade deals, which are mentioned, short-term facilities, have also contributed to that 8% income growth. And then lastly, to a bigger extent, trading in bond, especially the infrastructure bond that happened in Q1, also informing that 8% growth that you're seeing in this period. We've put a chart on the right to show the makeup of this revenue for the four businesses that we have. And the comment I'll make here is all the businesses have recorded growth year on year, with our corporate business, our global markets and business banking businesses recording double-digit growth rates in this period. If I look at the side of costs, the investments we've made, you see costs picking up 12% from 10.1 last year to 11.3 billion in this period. A big chunk of that is the investment that our MD has mentioned. If you look at staff cost, you've seen staff cost picking up 10% to about 6.1 billion shillings. And in here is the hires that we've done during this period. And majority of these hires is customer facing. It's more on the sales, it's more on staff who are actually dealing directly with our customers. The other component there, of course, is the salary increases that happen normally for us in April. And then on the taxes side, we also get an impact there, especially with the housing levy, the contribution that the employer has to make, that also, resulting in that increment on the staff cost. Another big number there is depreciation, 14% up, 553 million shillings in this period. And this is mainly because of the investments we've done, the branches, the footprint that we've done over the period through IFRS 16, the right of use, that has an impact on that depreciation figure that you're seeing. And then lastly, there is other operating expenses. A big component on that is the automation bit that we're doing, software licensing, and then finally also creating that awareness, especially on the side of marketing, also contributing to that increase. You've seen a steady drop in our cost-to-income ratio over the period, among the best in the industry. Q2, you see a cost-to-income ratio of 36%. You'll always remember this is a ratio of two variables. So if revenue is picking up, you're driving on efficiency, effectively you can see that coming down over the period. A good story, and through that, together with what the MD has mentioned, investments like, for example, in technology, 3 billion kind of shillings investment that we're doing just to make sure that we are reaching our customers, we're giving alternative channels to them, and making sure that we are also automating on the back end, just to make sure that we're also driving on the efficiency story. If I look at then on the side of risk during this period, and I'm looking at half 1 2023 coming to half 1 2024, you're seeing nearly the same level. Impairment at 5.2 billion, same as the previous year. But then in there's been a lot of movement. A big component there, the recoveries that have come through, more so on the side of wholesale, which have actually helped these numbers. But having said that, also deterioration on the portfolio quality, especially for our retail, customers, noting the tough environment, high taxes that I've mentioned, that have actually impacted our retail customers. So a component of that has also come through. But when you look at recoveries, you look at the impairment we've taken over the period, you see that it's actually flat compared to the previous year. Our MD mentioned the kind of forbearance support we're giving to our customers, the 1.3 billion, restructures or debt consolidation or repayment holidays that we've been able to give our customers has also ensured that, once the customers get, for example, the repayment holidays, they're able to restructure their businesses and be able to sort out their financial needs. They're always coming back, and that comes through the recoveries that I've mentioned. On the right-hand side, we are showing our gross NPL ratio. You see that has picked up from 9.2 to 11.2%. And a big component of that is actually on the retail side, the one I've mentioned. So we've seen impairment peaking on the retail side. The increment there, a big chunk is actually on the side of retail. So personal, household, sectors. But then on the other side, on wholesale, we've seen this picking up, especially for manufacturing sector, and also to a certain extent, the real estate sector as well. Looking at these numbers, you see NPL of 11, gross NPL ratio of 11.2%, still way below what you have in the industry, which is at around 16.6. The coverage ratio, good coverage ratio on these numbers, at this point that is at around 68%. And then to bring it all together, just looking at now the P&L, income, we've covered that, 16% up. Operating costs, the 12% we've discussed. Impairment year-on-year flat at 5.2 billion, same as what was there last year. And then when you look at then profit after tax at 10.7 is a 29% growth year-on-year during this reporting period. Balance sheet, we've managed to cover all of that. If I go then to some of the key ratios that we're following, we've gone through the cost-to-income ratio at 35.8, loan loss ratio at 3.3%, shows we are taking risk, we are making provisions for that, hence that growth in the NPL ratio, the one that we've already covered. Then you're seeing on yields in lending picking up to 16%. I mentioned cost of fund has also gone up. And the new number that we've not looked at here is ROE. So the return on equity, you can see a significant improvement at 29.3% for this period. On key ratios that we're following together with the regulator, we have significant headrooms. You look at the core capital ratios at 14.8, way above the 10.5, which is regulatory. Total capital at 18.6, again, higher than the 14.5, which is regulatory. And then on the liquidity ratio, that picking up at 35.2%. So well-balanced, some good headroom that gives us an opportunity to be able to grow the business even as we're looking at the second half of this year. So as I conclude, just some guidance notes as we look at full year. You see growth in revenue, full year, we're still expecting to do double-digit revenue, so all the way to end of the year. Cost-to-income ratio, low 40s. We still have appetite to do investments. The 3 billion that MD mentioned, these numbers will come through, but they will still be in the low 40s. If we look at ROE, we still expect this to be way above the cost of equity by over 5%. And then in terms of just the industry NPL ratios, we still expect this to be way better than what we are seeing in the industry. The appetite to invest is there, but then the emphasis on quality for us can never be, be negotiated. So overall, I think good set of results. revenue picking up, you look at PAT picking up, if you look at our market share, be it on the side of profitability or even in revenue, you see that we've been able to consistently be increasing our market share on those fronts. And this just underpins the strategy that our MD has already articulated. So let me pause here and request the MD to come and conclude on this one. Thank you.
All right, thank you. Thank you very much, Yusuf. I'll just spend a minute up here to conclude. First of all, to say that, you know, within the operating environment that I described earlier, we continue to execute against our strategy. And we do have annual reviews. In fact, next week we'll be out with the team and we'll be out in October with our board to revisit and just look at what we need to change in our approach and in our strategy, and the flexibility is there. But so far, we continue to execute well. Revenue up 16%, profit up 29%, growth in customer liabilities and, you know, the deposits from the clients. Yusuf explained the factors within the lending book that are at play. Our return on equity at 29.3 remains among the best in the industry. And we have NPL at better than the industry average. And overall, the strategic pillars that we have committed to with our stakeholders continue to remain firm, and we continue to work on those areas. The last slide that I would like to cover is the one on dividend. And as we have done in the recent years, we will be paying an interim dividend, and the board has approved a number of 0.2 per ordinary share. This will be paid somewhere in the middle of October, and the decisions on the full year dividend will be done, as always, once we have the full year numbers. And as you will see, the total dividend payout over the last few years has been growing. We try and ensure in our dividend payment policy that there is a balance between reinvesting and making sure that we are preparing for future growth, as well as ensuring that we give shareholders return on their investment that is competitive in the market. So really, really pleased to be able to share this news on our interim dividend as well. So let me stop there, ladies and gentlemen. Thank you very much. Peter, I will now call you up to do the rest of the program. Thank you.
Thank you very much, Abdi and Yusuf, for that insightful presentation on our half-one performance. To quote Yusuf, that's a good story. And I also like what Abdi said, that as we look at our half-one, we are looking at numbers, but we're also looking at the impact on our customer stories. And we continue to walk the journey with our customers and building their stories together. So ladies and gentlemen, we've come to the close of the first part of this session. We'll be bidding goodbye to those of us who are following online. But for those of us who are in the room, we are going to the second part of this conversation. We'll have a question and answer session, and we are going to do that in two parts. So the first part is going to be engaging with our media fraternity. So we will prioritize that for the first 30 minutes. And then we will remain in the room with our analysts who we are going to engage with for the last 30 minutes. And to facilitate our transition, we're going to watch a video, and at the same time, we're going to ask the team that is helping us to set up here for Abdi and Yusuf to come on stage. Thank you very much for those of us who are following online.
Good morning, Peter.
We believe in ideas that can change the world.
Striver, and believer. At Absa Corporate and Investment Banking, we are invested in your story, and we invite you to write it with us, because your story matters. Absa.